Alright everyone, welcome back to the channel, and in today's video I want to do a detailed teaching on market structures. So I'll be starting with the bullish market. Just like we know, in the general market there are three types of market, which we have the bullish, the bearish market, and the consolidating market. So I'll be explaining these three markets right now. I'll be showing you their structures, then maybe later on I'm going to do like a real chart experience on how to identify good structures and take prices. So first of all, let's go into the bullish market, which is this market, the bullish market. So this is like a schematic diagram of what a bullish market looks like here. So now looking at this chart here that I've drawn, you can see that we have this as the lowest point here and this as the highest point. And just like you know, markets actually move in this zigzag manner here that I've drawn here. You see the way markets actually move, it goes in and comes back. So the art of actually retreat coming back here, like this is a bullish market, right? So this is how markets do go in zigzag manner. So you just have to, watch closely in the manner of market. Like this one now, this one is actually pushing up, coming down a little bit. The force it uses in going up is actually higher, which makes it a bullish market. A bullish market is an uptrend market. Like you can see the indication of this arrow pointing up here. So the process of price returning back here, this movement, the process of price retracing or returning back here is called the retracement. Since the overall movement is actually bullish, there's always something price does. Price pull back or retrace it a little bit to gather momentum to push up more, retrace it a little bit to gather momentum to push further. So that's what price does. And you see, anytime price comes back or retrace it, it's going to actually push past the former level it was. So it's more like coming down to gain momentum to push out. Now, there's something I want to explain, which is the range. The range is a visible level. Like what a range means is it's two price action level, like the distance between two significant price. So now if you look at this range here, you see that the lowest point of this price is where you mark out as your low. All these level are still lows, but the visible lowest point of price action is going to be your low. Let's just say we're analyzing from a 1 hour time frame. This is a 1 hour chart, and you look at here, you can see that this low is the lowest point of where you are actually analyzing, and this high now is the highest point of price action. So from the highest point to the lowest point, you can actually mark out is a range. That is how you get this range here. So let me see. Okay, I'll actually show you in a real chart later on, but this could also be a range. This low to this high could also be another internal range inside of this range, but this is the most significant low and this is the most significant high, which makes this the original range on that time frame. Like this is the lowest point because this low is not lower than this one, so we're actually looking at the overall range. So this is a range. So we analyze in range, price range. So we want to know what is happening within this range. That is how we can say that after we must have seen what is happening in this range, we tend to know what to do next. So from the look of things, what is happening in this range is that price is actually pushing higher, retracing a little bit, pushing higher, retracing a little bit to push higher to form this bullish move or bullish market. So most likely what we will do now, since we know that price is moving in this pattern, whenever there's a retracement coming down, we tend to enter the market around here so as to continue up, with the market. So that's more like the way we trade market. We trade the bullish market after a retracement so as to continue buying. We don't want to be buying at this level here when price is actually retracing. So we don't want to be buying around here. Let me show you. So we don't want to be caught up buying around here, around this level now when price is actually retracing. Now, whenever price retraces, there's something that always happens. Like I said, it's going to push past the former level, and when it's pushing past the former level, it's actually breaking out a structure like this high now. This is a high, but this is the highest point of price. This is a high, this is a low. So if price should break out new highs in a bullish market, it's called a break of structure because it has taken out this high. Remember I told you this is also a range from this low to this high. Let me draw it out. So that is also a range, but the overall range is this one that we mark out the lowest point and the highest point. But this is also a range here. If you look at this high, this is a high to this level here. This is a high, but that's not the highest point of price action. And this is also a low. Let me show you. This is a high, this is a low, or we can use this high. Okay, let's use this one because this is a low. Okay, this is the low. Sorry, let me use this lowest point. Like if we are analyzing now, we look at this is the lowest point of price and this is the highest point of price at this time. So if price should trade above the highest point, it's going to give you a break of structure, a break of range, because initially before we got here to be the highest point of price, this was actually the highest point of price, giving us this range from this high, from that high now, from this high to this low, to this low. So as soon as price broke out from that level, we had to use this high now to be the new highest point. And although this is not the lowest point, but we still had to use this high as the highest point of price. So if price should break above, like the retracement happens, so if price should break above this high now, it's going to be called another break of structure. And we can also use this low to be the next range, although it's not the lowest point, but it can just be the next range in price. You want to be able to know what is happening between this high and this low. So this could be a range. So whenever price break through a range, it's called a break of structure. But most time we tend to only mark out the significant low because this is the lowest point of price and this is now the highest point of price, because we want to know what is happening overall in this range. But this low and this high is also a range of price because it has the lowest point at which price met or came to and the highest point at which it's trading currently at. So with that, now I need you to understand what a range or a mini range is and an overall range is. So this is just like the overall range and this is a bullish market. So right now, this is what's happening here. Let me explain something. How do we know price is about to turn bullish? Because from this level here, price was actually selling down before it turned bullish. So whenever we take out the last high that was created, because whenever we are bearish, I'll show you in a bearish market. Or let me just leave that for now, then show you in a bearish market. So since you understand what a bullish market is, when we create break of structure above the other highs, is now how we know that it's a bullish market. And if you use also your trend line to be able to draw behind the lows to connect them, once the lows are getting higher, that means price is actually trying to push upwards. So you can just connect these lows together and it will show you that, yeah, since the lows are going higher, then it's a bullish market. Yeah, so this is a bullish market structure. This is a range, the lowest point of price and the highest point of price. Then the MSS also stands for market shift structure or market structure shift, which I'll explain later on. So let me show you a bearish point or a bearish price. Now this is a bearish price and this is also a range, the lowest point of price and the highest point of price. Now you can see that if you connect the highs also is actually going down. These highs are also going down. So you know that this is actually a falling market. The market is actually dropping. And you see that these are lows here. If you come here, you see that these are lows, these are lows, these are lows here. So the lows is not actually going up like the bullish market is actually dropping down. So you know that the market is bearish. And if you look at now, for every um, break of a range here, you have a BOS, which is a break of structure. This is a BOS, a break of structure, because this low and this high is an initial range in the overall range, like I explained there. So this is just it here. Is the opposite of a buy or a bullish market. You have this to be a break of structure because you broke that range. Now the MSS, like I said, stands for market structure shift, because in the markets you want to know when you are transiting from a bullish market to a bearish market. Just like here, if you see what happened here, this MSS was actually showing us that the market is actually is about to move up here. So let me explain it on the other side of this graph here. So take for instance that we are in a downtrend move in market. So because we are in a downtrend movement and we expect price to actually continue creating lower lows, like, and lower high, because this is a high, this is a high, this is a low. So because we are going down, breaking structure here, we continue, or we ought to see price continue breaking structure. So whenever there's no break of structure to the downside, then we should be suspecting that price have another agenda. Like this is the last place we had a break of structure. Yeah, that BOS, this was a break of structure to form a new bearish range. So whenever there's no new break of structure, then you should be expecting a shift in market structure. Now a shift in market structure will be where price is now going to trade above the last high that was formed, giving you a signal that price might want to continue bullish. So if you see now, this is it here. So this is now a shift in market structure because price is not actually creating lower lows again. Instead, it has created a low higher than the previous one, which is telling you that price is about to move bullish. This is now the market structure shift, just like it happened here. So instead of price to create a low lower than this one it has created before, Instead of price to create a lower low, let's just say this was the last break of structure. Let me delete it. On this chart, this was the last um bearish break of structure to the downside. So we were expecting more break of structure to the downside instead from here. Like we were expecting a retracement, then price will not break down to create another break of structure, but instead it broke the last high, indicating that price is no longer going to sell. So that's just it here. Whenever price trade above the last high, sometimes it might not really be a visible high, but if you see something like this, these are the tools you can identify the market structure shifts here for the bullish one. When price trade above this last high now, that means we might not be creating lower prices again. Yeah. So you don't see that price will now move up. That is like knowing that this is a shift in market structure from the bearish side to the bullish side, then you'll be able to look for confirmations or look for ways to actually start looking for buys after the retracement, the last retracement here, because you know that we've not transited from a bearish market to a bullish market. So you might just want to enter this trade after this retracement to continue the buys. So that's it here. Now, another way to actually see a market structure shift on the bullish side, because sometimes it might not really be visible, you might also see something like this. You might also see something like this here, where you have this to be a bearish market. So most times this shift in market structure might not be visible, but if you know how to actually trade it, then you'll be able to see. Okay, this is not what I want to draw, but let me show you. But now, if you look at the second shift in market structure, you see that it is different from this one. Now, the difference is that this one, the shift in market structure occurred when price actually broke the last high of the last low. This is a high, this is a low. So if price trades above the last high and create a new high above it, then we know that we're actually going to go bullish. But if you look at this other scenario here, because there are two scenarios where we can have a shift in market structure. If you look at this other scenario here, this is the last high of the last low. So if we are looking out for a shift in market structure, we'll be expecting price to actually break out this high. But this is going to give rise to a late entry, because this is the intermediate, or this is like the immediate high in between this range. Like this high now, this is the low. Look at, this is the high that we ought to have a real shift in market structure, but inside we have another high, provided this high is the last high that was formed within this level here of reversal or retracement. We broke through it, causing a shift in market structure. Whether is this originally the last high or this is an intermediate high, so this is still counted as a shift in market structure. I know you might not really understand, but later on when I go into the real examples, you will get it. So this is like a shift in market structure already. This is telling us that we might not be continuing bearish, like we might not really have a break of structure below here. Instead, we want to continue bullish. So seeing this, you're now aware that price is actually going to take out this one. So this can also serve as a shift in market structure. That can also serve as a shift in market structure. So see the two types of shift in market structure. This one has to do with sweeping or taking out the last high, which is very visible, but this one is just taking out an intermediate high instead. So with that, now you know what a bullish market structure is. You know when price is actually creating a market structure shift to show you that it's actually moving bullish. So let me take you to the consolidating market, which is actually the interesting market here. Before then, just look at this one. You can understand how or why I'm actually here to be my MSS. So the market structure shift is very visible. You can see that this was the last low here. This was the last low, and price traded above the last low. Price traded above this last low. Yeah. So price traded above this last low. Price traded above the last high, causing a shift in market structure because it's the new or is the first break above the last high. Then any other break is going to be a break of structure. So after this retracement, you can just simply enter your trade from here. Then the same thing for the bearish market here. From the bearish market, you see that as soon as price took out the last level of price, like this lowest level of price traded below it, it caused a shift in market structure to the downside. Then because this was actually a higher low from here, like if you're looking at it, this was also a higher low, like price was actually bullish from here. On the consolidating market, you see the transition very well. Price was actually bullish from here. So how do we know that price is actually going to go bearish? Is when price breaks this last low, the last high low that was formed. So instead of creating a higher low, instead we form a lower high, sorry, a lower low. So now this is now a break of low, causing the first break. Because it's the first break, we now call it a market structure shift. It's transiting from bullish to bearish. Then every other one is going to be a BOS, which is also known as a breaker structure. The same thing here. Let me show you. Now you're looking at it now. This is also a market structure shift from the way I explained the second market structure shift for you. This is a market structure shift here, because we've, instead of creating a lower low, we created a higher low. This is a higher low. So instead of creating this low lower here, it's now moving up. So this is also a market structure shift, and we expect price to continue moving up from this level. So let's go into the consolidating market. Now the consolidating market is going to consist of the bearish market and the bullish market. So this is where you see the real transition of price action. Now, if you look at the consolidating market, you've seen that we are transiting from bullish market to bearish market, and this is everything I've been explaining, right? Knowing when to find the shift in market structure, the breaker structure. So you look at here now, we've been creating breaker structures upwards, upwards, upwards. So you see now we've been creating all lows way higher, higher lows, higher lows, higher lows, higher lows. Like this is the lowest point of price, so it was higher. And instead of price to create a higher low here to continue bullish, price created a lower low. This one is lower than this one. This one is lower than this one. So this is now a market structure shift. And the next thing we saw was price broke through this low again, which is now a breaker structure. That means price have officially turned bearish. Now we are now actually going bearish. We are now creating a series of breaker structures, breaker structures, breaker structures to this level. Yeah. And instead of we to have a new breaker structure to the downside, price traded above here, which was a market structure shift here. So we know that price is actually going to continue bullish. So after a market structure shift, we retraced down, we had a breaker structure, and we continue going bullish. So a consolidating market is a market that is happening within a fixed range. As you can see, this is a fixed range, a rectangle. Price have not traded above the rectangle in a long time. So it consists of uptrend market and a downtrend market, but it is not actually a trending market. The market just fluctuates in both directions. So with the use of market structure shift and breaker structures, you'll be able to know when to transit from a bearish market to a bullish market, or from a bullish market to a bearish market, just in that manner, as long as the consolidation shall last. So that's it here on market structures. So I think I should show you a real examples here. So let me take you to my chart, right, to show you this example. This one to show you a real life example here. So this trade, I am actually on this trade here. So this is a bullish market. If you see, if you try to connect the lows like I taught you, you see that this is the lowest point, like this is the range. Now you see I marked out my range, this was the lowest point, and this is also the highest point around there. That is very visible, but you can see that these lows are higher lows. This is the lowest point, this is the higher low, this is another higher low, this is another higher low, and this low is also higher, but this was where we had the last higher low. So let me just draw this line. Now you can see that this is the bullish market, right? So we're expecting price to continue going bullish, not until this level here. Let me zoom in. Now this is a low. This was where price created the last low. This is also a low, and price actually retraced. So see what happened now. Price created this low again. Price created, after this retracement here, price retraced, created another high, retraced again, created this low, and it retraced. So when price was supposed to create another higher low, it broke this low, causing a shift in market structure, just like I explained. So instead of price to keep on creating a high from here, a higher low from here, and just continue trading up because we are bullish, it broke the last low, broke this one. So this was where I first saw it here on the 15-minute EUR price. So price broke this low, causing a shift in market structure to the downside because we were bullish, like I said. So after the shift of market structure, price retraced again and continue creating lower prices. Like now you can now see that instead of creating a higher low, price have now created a lower low, causing a break of structure to the downside, which shows you that price is now going to start dropping. And you can see how price dropped here. This is a break of structure to the downside. This is another break of structure to the downside here. This is another break of structure to the downside. So this is how you know when price is actually going to take a U-turn, when price break through the last level here. Let me also show you this other example, although this one might be complex here. This is the second type of shift in market structure. I was telling you that you don't really have to wait for price to break the lowest point, because this was actually the lowest point of this high. Like if you're looking at it here, this is the low, this is the low of the last high. So you cannot tell me that I'll have to wait for price to break this last low before I confirm that like I cannot wait for price to break this last low before I confirm that price is about to shift. So this one was now an immediate low that was formed inside there. Immediate low that was formed. So I took this one as my market structure shift. Then in IDM news inducement and price took it out, traded below, and I took this setup also. Now that's for the bearish market. You can see for the bullish market we have several break of structure to the upside. This line break of structure. This other one is also a break of structure out of this range. If you're drawing out your break of structure. So at first when you want to do your analysis, whenever you have a break of structure, you expect retracement, break of structure, a retracement, and you enter after the retracement has been formed, then you enter for buys. A break of structure, a retracement, you buy, break of structure like that, and you keep on buying. This is a bullish market, and you can see how it's transiting to a bearish market. Now I know that whenever there's a break of structure, I expect a retracement. Now this is the retracement happening, just like it happened there, break of structure retracement. So whenever price retraces to a particular level, it's going to continue selling again until it creates a new market structure shift, just like that. So that's just it. Now let me show you another example transiting from a bullish market, okay, a bearish market to a bullish market. Let me see if I have any example of a bearish market turning into a bullish market. Let's use Euro AUD. I think I have too many trades here. Okay, so this is Euro AUD, and we were actually bullish again. I told you whenever price takes out the last low, this was where I had my breakers, my market structure sheet. I saw it here. As soon as price took out this last low here, this was the lowest point of price action there. So I was expecting price to actually continue going up from there, but price took it out, and see now this was the lowest point here. This was the lowest point here. So we're expecting this low to actually be a higher low, then price should actually continue going up from this level here, but price traded below is causing a shift in market structure. Then it retraces again, then I entered around this first retracement, it came down, it created a break of structure, keep on going down just like that. So we traded to a particular level, and now how do we know that that trend is going to end? As price broke the last high that was formed here. This is the last high. This we were supposed to have a continuous lower high, but price closed above here. Price closed above here, causing another shift in market structure to the upside, and we kept on going high. So let me show you like a higher point of price. So this is another one here where I also entered. Price was actually bearish here. Price was bearish here. Although this one failed for some reasons, this was a shift in market structure, but price later came back to take out liquidity here. So this was a bearish move here from this level until price traded above the last high. This was the last high, the last lower high. It closed above here. So this is not my shift in market structure, the retracement, although I entered after this week of liquidity. So there are levels in the market here, different kinds of confirmation. You see, we're not having break of structure to the upside, break of structure to the upside. So you can also count as a break of structure to the upside. Kept on going till I got here. Now this one is not really visible, so let me don't explain it so you don't get confused. So this was another one here. If I check now, if you see this little thing, that little line, that was my confirmation, the shift in market structure, because we use the shift in market structure to confirm when you're about to start a new trend or a new price movement here. So where is it? Let me show you. So this is it here. Let me show you this other trade I took here. So this is a very small time frame. Me, I like looking for a shift of market structure in the smallest time frame so as to get an early confirmation. Now if you look at here now, this trade I took also, you can see that as soon as price broke the last low, I knew that this is now going to become a bearish market. So price broke the last low that was from there. So instead of price to continue moving up, it traded down to break this last low, causing a shift in market structure, which means that we are not going bearish. So this was the break of structure. Price was just retracing to a particular level, and I saw something like this. I saw this. This was not a new shift in market structure for me. This is not a new shift in market structure for me, so I left the market around this level. So this shift in market structure should happen in a very good level, so I'll be teaching you that one next time, or I have a video where I already mentioned where to find a good shift in market structure and how to identify a good one. I'm just explaining it because in the market so many shifts in market structure is going to happen. Provided there is a retracement, you always find the shift in market structure, but in order not to scare you or make you run out from a trade, there are levels you should look for a good shift in market structure, which is in the other video I made here. I'll also tag the link on the description of this video. So here now you see we had a shift in market structure right here. This is a last high. In 1 minute you tend to see the shift in market structure faster. This is the last high, price broke here. That's the shift in market structure. That's a high, that's a low. So price broke 40 and it started going up just like that. Now, when I mean, you need to watch that video, because if you see something like this now, this can also be a shift in market structure, and you can either close your trade and think that we are going down. But when you understand where to look for shift in market structure, you're not really going to be scared looking for shift or looking at shift in market structure happening in different levels. But sometimes it can also be a good signal to leave a trade. So imagine you closed after you saw that signal here on the 1 minute. You can now see how price sold down, but due to the fact that you're a professional, you know why price is selling. But you can see after this signal here, price sold down to this level, then it signaled again, closing above this last high, like closing above this last high before you can see how price moved up again. So you just need to understand your own shift in market structure, know where to find them. That video will help you know where to find them and how to use them. So that will be all on market structure. So this is just how to find your shift in market structure. I don't really trade the consolidating market. If not, I would have looked for examples on consolidating market. So I don't really trade consolidating market, but that will be all the examples for now. So do well to like, share and subscribe. So I don't really have examples of a consolidating market, yeah. Or we can also use this to be a consolidating market. This is a fixed price action, yeah. It's a fixed price action, and you can see how price bought. And you see, this is a real life example of a consolidating market. So most times you don't really know what is happening in the market. Price is just confusing, but you can see whenever you have a shift in market structure, price is going to drop, just like we have this one. Just like we had the shift in market structure and price dropped just like that. So that will be all for now. Do also like, share this video amongst your friends, and subscribe to the channel. Thank you for watching, and see you in the next video.